All right, here we are. We are reporting for the quarter ended September 30th, 2023. So this is the mid-October video.
That's right.
This is going to be a little bit short because we didn't perform as well this quarter and we don't really want to remember this quarter at all.
Well, that is now.
I'm going to start out with a few numbers and then Tarek's going to try and explain what he did wrong this quarter. Okay, so starting with, I'm going to start with the aggressive growth. So the account that I'm using as our sample on this one. So this is, remember, the enhanced index aggressive growth portfolio, which is 80% equities and 20% fixed income. And by now, most of you have moved so that your portfolios are, either 20 or 35% fixed income. So you've taken down your fixed income component and taken up your equities. That it may be coming time to start reversing that, but that's looking ahead. Right now, for the last quarter, the return in my account was a loss of 1.25%. That will be similar to yours, those of you who are in this same portfolio. Tarek has also run some other numbers. The enhanced index growth portfolio had a loss of 1.22, very, very similar to the 1.25. Okay, we don't want to get too lost in the numbers. At the same time, in the quarter, the momentum portfolio, which we have been bragging about as our star and the rock, lost 4%. Okay, so remember, it's about 1% in the enhanced index, and it was 4% in the momentum in this quarter. Now, we haven't had many quarters where we've lost, and we haven't had many quarters where we've underperformed the index. So the total return on the TSX was a loss of 2.2%. So we lost 4% in the quarter in the momentum, which is not good. We underperformed. But in the enhanced index, we outperformed with that 1.25% loss. Not that we're proud of losses. Most of that loss came in the month of September. And what was happening there was, and now I'm leading to the point where Tarek's going to pick it up and go with it and explain what I need to say we did wrong, or what was happening within the portfolio and our strategies. And then we'll come back to what are we going to do looking ahead. But most of that return was a loss in this month of September. And I think what's happening is there's a rotation from these tech stocks that have been rockets to the rest of the market. And that's what we're seeing when you see value stocks outperforming the momentum. Okay, Tarek, tell us what went wrong in the quarter.
Absolutely. So I think you kind of touched on a couple of things that are especially important. First of all, we do want to say, it's tough to report negative numbers, but it's just, we got to remember, I think just about every one of our clients is invested for the long term, and ups and downs of the market are to be expected. So what happened? Why exactly are we in the red right now? So for the first 6 months of the year, those of you who listened to our quarter in review for the end of quarter 2 in June, published in July, we mentioned the Magnificent Seven, as they were called. These are 7 tech stocks in the States that were really leading the charge on a huge rally in the first half of the year. This rally was related to a lot of excitement around AI, and mostly, or a big part of it, I should say, was, central banks had raised interest rates so much, but the market, the economy, I should say, was not crashing, was not moving into a recession, and inflation was kind of coming under control. And a lot of analysts were excited that, hey, we may not have this hard crash or this hard recession, despite rates going up by more than 5% within a 2-year period. And so we saw growth stocks really take off because of that, particularly that Magnificent Seven, but also here in Canada. And then throughout the summer, we realized, in Canada, GDP's kind of fallen off. In the States, it looks like the Fed's going to keep rates higher for longer. And we saw those growth stocks also lead on the way down, right? And so, live by the sword, die by the sword, I guess.
Right. That's right. So really what we saw was a bit of a bubble pop in the month.
Yes, exactly. Exactly, which is not a bad thing. You know, bubbles popping is always just part of the way it goes. Now it's tough to see, like I said, the stocks, you know, balances in your portfolio go down. But we do think, as Mark mentioned briefly, there's a bit of a rotation here happening to more value stocks. Rates are going to be higher for longer. Economy is still going to be slowing down. We may still see some recessionary pressures, and that's why companies with strong fundamentals leaning more towards value will be in more favor, in our opinion, moving forward. So if we're switching from looking back to looking forward, in the, you know, roughly 2 weeks, maybe 10 days after the quarter end right now, we've seen, you know, a solid week of positive numbers in the market, and that's a good thing. And it's up from its end of September lows. So yeah, the rotation is moving back to value in our opinion, and that's going to benefit those of you in the enhanced index. Because that's where those indexes are tilted towards companies with strong fundamentals.
And by now, we did a heavy rebalance at the end of September, and we've moved quite a few of the value stocks back into that. So we've got different names in there now that are probably going to begin to perform in line with these growth. Looking a little bit further, it is worth noting what our 3 and 5 year performance numbers look like. So over 3 years, the Canadian Momentum had a 13.3% return per year.
That's right.
That is not bad. 13.3% per year. The 5 year return for the Canadian Momentum is about 9.85. Those both compare really favorably with the market, as you know. Enhanced index was a 10.5% return in the 3 year.
This is the aggressive growth.
Aggressive growth.
Yeah.
Thank you. Good point. It had a 10.45 return. The TSX total return was 9.88. So the aggressive growth slightly outperformed that, and the momentum handily outperformed it. And, you know, both strategies performed well on the 5 year horizon. I think I want to say one other thing, Tarek, and that is we talk about interest rates being high right now. I'm not sure we should be calling these high rates.
Right.
This might be where we settle in for quite a while. One, it's a way to manage the economy. 7% and 6% interest rates, they're painful going from 1 to 6, but high rates are 13, 15, and 20%. And some of us will remember what that felt like back in the 80s. I would not want to have us postulating that interest rates are going to go back down to 4 and 3 and 2%. I think it's better to start looking ahead and say, okay, what do markets do, and how well can we perform in an environment where interest rates are where they are now, and probably sustainable there at this rate. Okay,
I
what
agree
else?
with that. Yeah, it's a bit of a normalizing of here's the band of rates that's probably going to be what is going to going forward. They may go down by 0.5%, or may go up by 0.5%, but we're not going to see. I don't think the plan anyways is for them to drop down, like you said. So, in terms of anything else, we don't want to make this video unnecessarily long. The only thing I would emphasize is before, when you mentioned the 3 and 5 year returns, I think that's a really good addition. We did handily and willingly take the blame, if you will, for the negative returns on the year or in the quarter. But it is important to mention we're invested for the long term, and the 3 and 5 year numbers show that the strategies are working. So stay invested.
Okay, we lost 4% in the last quarter, right?
That's right.
Year to date, that account still has.
That's right. So the Canadian Momentum is still up 7.4 year to date compared to the TSX at 3.4. So still handily outbeating. Aggressive growth is up 1.5 and growth is up 1.1.
And Tarek, the 7.4% that you said, is that after the 4% loss?
That's after the 4% loss. Yep.
Okay. Yeah.
Yep, absolutely.
Thought I'd just make sure. Good. We're done.
I think so too. All right. Thank you all for tuning in. We really appreciate it. Like I said, ask us any questions you have.
Have a great day.